Welcome everyone. Today we're going to talk about what U.S. market has the best small multi-unit opportunities. This is Seewing Yi from the Yi Mason Network, and my co-host is Julie Threads. How are you, Julie?
I'm fine. Good morning, Seewing.
Good morning. Thank you for your time to provide more perspective and input. This is very exciting. And if you're an investor, you need to focus on the right market, making the right deal, regardless of what's going on out there in the world. All the negative information, all the crash flows, videos that come into your inbox, destroying your financial freedom goal, all the doom and gloom, the sky is falling, negative headlines out there too, social media. Just mind-boggling how many people are programmed and conditioned into watching negative news and
Mm-hmm.
therefore impacting people's ability to take action in this very robust housing market, especially for U.S. investors. So let's dive deep. Am I right, Julie?
Oh, absolutely.
Let's go over at this one amazing market. Julie, you and I talked about this before, and let's talk about it again. It needs a different angle, if you will. So clearly, I've done a lot of research. I've been a risk investor for several decades, so I know what markets to trigger. So just come from experience and very serious rules have done it as long as I have. For more than 20 years, I've been to up and down, side market, up market, down market. I've been there, done that. I'm still thriving after all these years and hundreds of our investors, including yourself, Julie. Follow my guidance, my advice, and buy out of state, buy remotely, buy turnkey properties in the best robust housing markets in the country, even as we speak. So with that in mind, we can talk about the best small multi-units in the country. Quickly, where you can meet the 1% rule, rent to value ratio. 1% rule means 1% multiplied by the purchase price. That should be a gross rent. With this very base rule, then you could have very good cash flow properties in forward.
Right.
Am I right, Julie?
Oh, absolutely. No, you're absolutely right. In fact, I'm sure all of my properties did meet the 1% rule and probably exceeded it a little bit.
1% rule is very hard to come by. Would you agree?
Oh, I agree with that 100%. Yes.
Cash flow properties is extremely hard to find these days. As we speak in March in 2024, let me tell you why. Why it's very hard to buy a cash flow property. Cash flow property need under about 25% down payment. That's the benchmark.
Correct.
There's very few areas in the US you can cash flow with 25%
Right.
down payment because of a skyrocketing housing prices increase in the past few years. When you have 30 to 50% or more appreciation in many markets in the past few years, in many markets in the US, and then the rent increases are only 3 to 5% per year.
Right.
Now you see the disparities between rent versus the value of the property you buy. When I use the 1% rule, you guys are thinking, oh, it must be in the Midwest. Oh, yeah, you buy those older homes that have a high rent situation. Yeah, you can get the 1% in the Midwest somewhere like Indiana, Buckhead, New York,
Right.
Ohio, St. Louis, Missouri, Detroit, Michigan, and Dayton, Ohio, or whatever. Most likely, you can buy those older homes for $50 to $100,000 in rents for $500 to $1,000 per month. Just to get the 1% rule. Then again, of course, there's more to it than that. Those markets more like a blue collar market or
Right.
much older homes. They're not going to grow. So there's lower quality tenant renters and what have you, which is why still a lot of people doing it. I don't see nothing wrong with that. But
Right.
when you buy in a hot market where high appreciation market, normally you're not going to find anything coming close to 1%. So this hot markets, and we're talking about the South and Southeast. Mainly the top two comes to mind is Florida and Texas,
Texas. Right.
especially when you buy in a very fast growing housing market and you buy new construction investment homes. Normally, you're not going to find 1% rule. In this market, I'm about to show you, you buy a fourplex, a quad, or a sixplex. New construction, very rare. Not in this location I'm about to show. Not only these neighborhoods where this fourplex and sixplex is located is a A-class location. And you're getting A-class tenants, maybe B plus. And buying into one of the fastest growing metros in Texas, and that's what you have. There you go. And especially when the multi-unit is located very close to world-class medical centers, As you can see, how rare is that? Furthermore,
amazing.
so the healthcare industry not only will provide hospitals within the healthcare industry, there are many different type of medical care. We're talking
Right.
other support medical staff, as you can see.
Mhm.
There are different type of medical clinics in this market. There's a South Texas Health System, Doctors Hospital, Rio Grande Regional Hospital, University of Texas at South Texas. They have a medical college. The healthcare industry in this market is very robust. So that's the rental pool. By this small
it.
business, you're getting renters from the healthcare workers. How cool is that?
That's why you said that they're Class A tenants in Class A neighborhoods. They're medical professionals, they're doctors, they're nurses, anesthesiologists, all those professions that make up those teams, and they're all going to be great paying tenants. They're going to take care of your property well. It creates a lot of opportunity to grow that market.
100%, without a doubt. Within the subsets of this industry, this healthcare industry, you have this real AI, intelligence, the future of medical tech growth are all within this healthcare industry. Data centers, fulfillment, medical offices, life sciences. When you invest in the market, they have a huge healthcare industry. That's icing on a cake, right?
Absolutely.
And in South Texas is the fifth largest metro in Texas. Julie, you and I heard a major, huge metropolis like Houston, Dallas, Fort Worth, Austin, and San Antonio. This is the big four of Texas. Before long, South Texas will join the big four. It'll come a big five. My opinion. Hear me out. South Texas is not already, is soon to be a big five. South Texas can join Houston, Dallas, Austin, and San Antonio. The future is extremely bright. Look at the projection growth of South Texas, Hidalgo County. Look at potential growth for the next few
Oh
decades.
my goodness.
It's almost vertical growth. It was growing quite nicely in the
Mhm.
past 10 years. Now,
Wow.
currently and in the future, is how many markets you're seeing almost a vertical population growth. It is off the chart. One important metric, the housing cost in this region
Mhm.
is low. Is affordable housing market.
Mm.
Where the median price for single family home is below the nation's benchmark. The benchmark, the minimum home price in the country is a little bit higher than 400,000. But the median price of a home in South Texas is below 400,000.
Wow.
So
That's amazing.
what does it tell you? It tells you this area is have low home affordability, which is good,
Mhm.
and have a lot of potential good goals.
That's what I was going to say. A lot of potential for growth.
That's very obvious. The numbers don't lie. And the Hidalgo County, South Texas, is already at 1 million people.
Wow.
I talked to some investors from other part of the Texas entering this market. They themselves are not even aware that South Texas
Interesting.
is becoming the fifth largest
Mhm.
metro in Texas. McAllen,
Mhm.
Edinburgh, Mission, in this neck of the woods at the southern border of Texas, bordering Mexico. Let's go through the LTR, means long-term rental pro forma. Again, my investment philosophy for many years is to buy 1 to 4 unit because you can qualify for the Fannie Mae investment lending for investor for residential loan. Keep that in mind. These type of fourplex are located, like I said, close to the medical clinics, close to the colleges, universities, close to the major hub of this county. You know what's so funny? I've done this for a long time. It's emerging growth. When you find new construction of highway, offices, new colleges, new shopping mall, new infrastructure,
Mhm.
new freeway being constructed. I mean, something's going on.
Absolutely. Read the signs.
It is the trends and the signals are so obvious.
Correct. Correct. Mhm.
Anyway,
Mhm.
let's continue. So this is a typical, amazing fourplex. No other areas in country you're getting a new construction fourplex only at 545K. If you break it down, divided by 4 units, each unit is $136,000 per unit. 3 bedroom, 2 baths, 1,050 square foot,
Mhm.
and it rents for $1,350. It meets the 1% rule, which they're rare to meet,
Mhm.
except in the Midwest, as we discussed. But this is not Midwest. This is a fast growing South and Southeast metro that have a lot of room to grow. So all the numbers make sense. You look at the 4-unit rented at 5,400, Class A, Class B plus tenant pool, as we discussed before. You put 25% down payment, even at 7%, 30-year fixed rate, a mortgage for investors. You still have a net monthly cash flow of $773,773 per month. Just the first year production. Look at the rent to value ratio, 1%. Look at the capitalization rate, 7.6%. The capitalization of 5.5% is the benchmark minimum, way above the benchmark cap rate, 7.6%. Cash on cash percent, cash on cash return, 6%. If you add on the annual net cash flow of almost 10 grand, plus the 5% appreciation rate at the end of the first year, your total return on investment is a whopping 28%. That's huge. Nothing compared to it. Nowhere else in the country. In fact, I'm going to compare. I'm going to do an apple-to-apple comparison coming up to you momentarily. By the way, this is a 6-plex. You need a commercial loan to do this. A 6-plex in this area, brand new, same kind of floor plan, beautiful interior, beautiful construction by a very high quality builder. Only $600,000. We're talking $100,000 per unit. And each unit in the 6-plex is like 2-bedroom, 2 baths. Brand new, looking in a very good neighborhood. You put 25% down payment at 7% rate. Your monthly net cash flow on this 6 unit is almost $1,000. Can't beat that anywhere in the country. There's no apple-to-apple comparison in any of the 40 United States. You might try. You might say, oh, Seewing, you are being subjective here. You're not telling me all the whole story. I've done all my research, not just now, but over the years, and I have not seen any market in the country we get these kind of numbers. You can use your IRA, your self-directed individual retirement account, something, Judy, you and I know a lot about. I'm not going to talk about it too much. It'll take 1 hour to present this topic, but you and I talked about self-directed IRA before on other videos. So those are people watching. You can search my YouTube channel. Better yet, you join my investment club, put down email into my website below, so you can become a real estate insider, part of my free membership of my network, and you will learn more about everything else in addition of how to use your self-directed IRA, the name of the IRA, to buy a property. But I'm going to give you a recap. On the 4-plex we just talked about, here are the numbers. You can put 70% down payment and loan to value, 70% of your IRA, and then we have a specialized lender. They'll give you a 30% loan to leverage your IRA. Okay, so that's the ideal situation. Or you can put all your IRAs, dollar for dollar to buy this property.
Yeah, that's what Mark and I ended up doing. It really has worked out well for us. When you put down all cash and it just becomes seamless. Hearing you talk about it in the first presentation when we heard, that was the thing that got our attention the most, because most of the money that we had was inside of our retirement account. So that worked out really well for us.
A lot of people, Julie, you and I talk about it many times in our videos, still a handful of real estate investors are aware that you can buy a rental property using your individual retirement account.
That's another class.
You and I did a lot of videos, so you can check my YouTube channel. Become our subscriber. You will learn more about using self-directed IRA. Let's continue. Now, of course, the resources you can talk to or these individuals, they can help you set up a self-directed IRA account.
We use Bill Neville.
Yeah, he used to enter a book in Oakland, California.
They are very efficient.
They set up your self-directed IRA. Only a handful of them that can be self-directed IRA, and we have the resources available for our investors to tap into. So save you tons of waste research if you want to look yourself, right?
Absolutely. You have done the research. You've done the work. We just need to take advantage of the work that you've already done.
Yeah, if you do not have the full cash purchase on a particular property using your self-directed IRA, you can leverage your purchase using a non-recourse loan and use 30% loan to value on this one non-recourse lender that we know, by the way. There are no other non-recourse lenders out there, to my knowledge, in the country that can do 30% loan to value, non-recourse loan to leverage your self-directed IRA to buy more property, right? Going back to this 4-plex, Let's say you use a 25% down payment to buy a rental property, whether this property or some other property, and perhaps you exhausted your ability to get financing using your name, 25% down payment, but you have a whole chunk of IRAs. Let's say you have like $400,000 IRA to buy a rental property, right? Use an example. And the property you want to buy is this very same fourplex 545K. You'll show like
About 150.
yeah, you're short about $150,000 from your IRA. You only have 400K IRA. This fourplex is 545K. So what you do, you put 70% down payment on the IRA, which is equal to almost 400 grand. Then you need 30% loan to value to get a non-recourse loan. That loan amount is 163. So you get 390 plus around 163 or non-recourse loan equal the purchase price of 5.5K, give and take, right? Furthermore, follow me, okay? I know there's too much number crunching. So non-recourse loan is a secondary loan, is not a Fannie Mae lending guideline, but of course, you like 8.5%. It's not even a essentially mortgage, it's some kind of adjustable. Fine. Do the leverage anyway, do the loan inside interest rate loan. At the end of the day, you crunch the numbers, right? Or IRA down payment is always 400 grand, give or take. Your loan amount of the non-recourse of 163, so your mortgage payment is 457, right? Then your rent is 5,400 on all four doors. You minus your debt obligations, monthly taxes, insurance, apartment management fee, the whole 9 yards. So at the end of the day, with this strategy, you could have a monthly net cash flow, monthly after all deductions of 2337. This almost $2,400 of cash flow is a tax deferral, goes back into the IRA tax deferral every single month until you're about to retire earliest age of 59 and a half. When you retire age 59 and a half, your cash flow will be higher, probably. And then when you trigger your cash flow for passive income retirement at age 61 and a half or higher, you don't have to pay the 10% early withdrawal penalty. You just pay the taxes on the amount of the passive income withdrawal subject to your ordinary taxation at the time of retirement, which presumably your tax rate is lower than when you had a working income W-2 job.
That's a great way for even someone on the younger side to start really building wealth in their retirement account. Can you imagine having that type of cash flow over like a 30-year period? If you bought it at age 30, there's just all kind of advantages to utilizing your retirement account to purchase investment property. We don't have time to go into it today, but if your clients have some money, and I won't even say a significant amount because we didn't have a significant amount, but we were able to do something to achieve those 6 properties.
You did it yourself, so clearly you understand. Tax deferral will the property, the physical assets is inside your IRA. You are not buying the rental property, the IRA is buying. So when you buy with your IRA, even with a non-recourse loan, you don't have to submit your W-2. You don't have to, the seller and the lender, they're not going to run a credit report on you. They're not going to ask you to provide a tax return, but you as an individual are not buying in the name of the IRA.
Correct.
IRA is a collateral.
Absolutely.
When we trigger this cash flow and the appreciation inside the IRA is tax deferral.
That's right.
You pay no taxes until you decide to withdraw the rental income at retirement. If you decide to sell the rental property inside the IRA, there are no tax consequences because it's inside a retirement account.
That's right.
You and I, we are not licensed tax advisor. We're not providing tax advice, consulting tax advisor.
Absolutely.
Okay, so let's go on. That gives me time. I know we're running a little bit over, but it would be, we should be done in 5 minutes. Now, this type of fourplex is very good constructed.
Very nice.
I can't see any fourplex, any small multi-units anywhere in the country with the quality of construction. So nice. These are stainless steel countertop. You make a washing, dryer, and you got air conditioning, and then microwave. They're very well designed. 3-bedroom, 2-bath, 1,050 square foot, and ceiling fan. These are high quality interior and exterior construction. This market is prime for medium-term rental. You can rent 30, 60, 90, 120 days to traveling nurses, digital nomads. They like to occupy a fully furnished rental. We can charge 50% higher rent
Right.
Medium term rental as opposed to long term rent projection. If you convert one or more of your units in this fourplex into medium term rental, assuming you charge 50% more per unit on a long term rent is like $13.50. You
Yes.
multiply by 50%. So you can make an argument you can rent it per unit for long medium term rental around $2,000 per month. You spend like 8 to 10 grand fully furnish that particular unit. Okay.
Mhm.
Medium term rental. So maximize this opportunity, successfully convert all 40 units, 2,000 monthly medium term
Right.
rent times 4 doors, gross rent per month is $8,100. Do the
Right.
math, minus all the monthly debt obligations.
Mhm.
At the end of the month, you have a
Amazing.
monthly net cash flow is almost $2,500.
Now that's an investment. You can't beat that.
You can buy one or two or three of these. It could
Right.
be medium term rental. You can retire right away.
Exactly.
Why wait 20 years to retire?
True.
The most important thing is you have to come up with a company, which is not easy. Like $160,000 per quad. Not everybody can do this, obviously, but you gotta have the capital to do this and have the credit,
Mhm.
financing. Yeah, but some people can do it.
Actually, a lot of people can do it.
Yeah, a lot of people within our network, we have engineers and we look in California, a lot of our
Right.
look in California, our investors come from Silicon Valley, engineers, and doctors and nurses or clients. They can afford this kind of property. So
Right. That's right.
when they see the numbers, it's off the chart. Anyway, that's what's happening right now. All right.
Right. Very good.
Medium term rental, again, I can only talk about for a few minutes. We don't have time to talk about in depth, but you want to convert one or more of your units into a midterm rental, you can use FurnishFinder.com.
Mhm.
There's a lot of resources available.
Very nice.
Look at this similar complex that we're promoting, charging $2,000 for medium term rental to rent.
Nice. Very nice.
This strategy works. We have a local property manager here in South Texas who is willing to help you with the medium term rental as well.
That's awesome. That's a great deal. It's a good rent too on this property.
Some people watching this video, they can say, Seewing, can you prove to me that on an apple to apple comparison, you just said what is true, that this property are better than any other 4 units in country? I'm giving you a little bit of proof. Here it is. I took the beginning of finding this 4 unit in Las Vegas. This 4 unit is older, is not brand new, is selling for $1 million, $650K per unit. And look at the scenario. Okay, so far looks pretty good. The summary on this fourplex in Las Vegas, close to downtown, fully renovated and all of that, all kind of good stuff. But you look at the rent. Okay, 1 bedroom, 1 bath, rent for $1,450.
Interesting.
1 bedroom, 1 bath, rent for $1,250. 1 door, 1 bath, rent for $1,250. These are the same gross rent that we're getting on a fourplex in South Texas. Price of this fourplex is twice as much.
Yeah.
Double.
Interesting.
Why buy a $1 million fourplex in Las Vegas where the total rent is similar?
Yeah, about $4,000. The other one in Texas, you were getting $8,000. So you're getting double the rent for the 4 units.
You know, 8 unit, $8,000 if you do a midterm rental. Also rental, the 4 unit in the quad that we have in South Texas is $1,350 times 4 is $5,400.
So that was only about 40,
2 units.
about 4,000.
After this 4 unit combined is about 5,000. Similar gross rent, but you're paying twice the amount. And here it is, the square footage of the Las Vegas fourplex, 100 square foot, 723 square foot. And the rent is similar to the fourplex in South Texas, 2 bedroom, 1 bath. And then let me show you another apple to apple comparison up the road from South Texas, 3 hours north of South Texas in San Antonio. I picked a property very similar in quality and location. The best I can do, I can find is a duplex in San Antonio, brand new, at similar price, $515K. But each unit is $27K on a duplex, not a fourplex. Similar price, 3 hours north in San Antonio. The rent is a little bit higher, of course, for the duplex, which is $1,700, and the square footage is a little bit bigger. But who's to say the fourplex in South Texas or not, it's $13.50 long-term rent. It's only like a couple $100 less than this amount right here. Could be the argument that the rent in South Texas fourplex will increase in the next few years to maybe even 1,700. Why buy a brand new duplex for 507K, the low 500K, when you could buy a 4-unit in South Texas and the rent is a little bit less, apple to apple comparison. At the end of the day, 1 to 4 units, any kind of income property, is Fixley's most attractive and powerful and proven multi-dimensional real estate investment asset class. All ways you can make money. So that's it. Here's my recap. Appreciate your time. So what's your takeaway from this presentation, Julie?
Oh, I think people should take advantage of it. Really seriously look into it. Don't be afraid of the negative headlines and just do your research. Get someone that you can trust. Like, you are our mentor, and we've been able to be very successful with what we've done. And it's possible. It doesn't matter when you start in life. It doesn't matter what market we're in, but you just got to get the facts.
Totally agree with Julie. Thank you so much for your time. And
Thank you.
people out there who watch these videos and you see any value whatsoever, please like and subscribe to my YouTube channel, and also comment below what you think. Do you like the apple to apple comparison? Where are you located? Do you like the number crunching? Do you like the unique value added property that we just show you? And finally, send your email, if you're not done so already, into the website below, so you can become a subscriber of our free real estate network. So you can receive weekly newsletters coming into your email inbox, so you can learn more about real estate investment opportunity through our network. And thank you so much for attending to the Seewing or my guest, Julie West. Thank you so much. See you on the next video. Have a nice day.
Okay, bye-bye.